Hello and welcome to an episode of Risk Talks. My name is Edward James and today I'm joined by Derek Leatherdale. Derek is a geopolitical risk expert and certainly geopolitical risk is being discussed more in discussions with CROs and risk leaders. Derek's he set up and was the global head of HSBC Group's geopolitical risk function. He now runs a consulting firm, GRI Strategies. His focus is on helping global financial institutions integrate more effective approaches to anticipating and managing the varied impacts and political volatility on their business models and financial performance. Hello, welcome to the episode, Derek.
Hi, Ed. Thanks very much indeed for having me on.
No, my absolute pleasure. I think we've got some really interesting topics to discuss and looking forward to hearing your thoughts and views. So I guess if we kind of get straight into the first question that I've got for you, why and how are global geopolitical conditions becoming more volatile, and why does this matter for global financial institutions?
Thanks, Ed. So if you wind back sort of 20 years or so ago, when many major global financial institutions were expanding operations across the world and into emerging markets, political and geopolitical risk was really something that was confined either to a small number of emerging markets or, on the geopolitical front, really an issue for the Middle East, and not much more wide an issue than that. Fast forward 20 years, and actually you now see major strategic, political and geopolitical volatility across many more regions of the globe, and particularly in developed markets, the kind of markets where it was always assumed that politics would be stable and operate within sort of a zone of certainty, even if there were different electoral outcomes. And now we see that has sort of broken down to some extent with issues around stability in Europe, clearly questions around US politics and the direction of travel there, and on the geopolitical front, a particular set of questions and issues in respect of the US-China relationship and how that's playing out in a way that didn't really apply 15 or 20 years ago. So sort of globally, the political picture has changed. And I think the range of uncertainty and potential political developments and outcomes is now much greater, and something that is a factor for financial institutions. In terms of how it can specifically affect financial institutions, clearly geopolitics can drive a series of macroeconomic impacts, and those are things that risk managers have to account for. But the impacts can be more direct as well. You can see how geopolitics can shape, for instance, particular industry sectors that form core client groups for investment banks or investment banking operations and corporate banking operations. So there's definitely a series of impacts there. And then you can see how geopolitical issues feed through into credit risk, into market risk, into capital and liquidity issues, particularly in that sort of bucket of impacts, particularly where there are geopolitical shocks or the prospect of geopolitical shocks rather than sort of ongoing trends. And you can see sort of broadly, in that picture that chief risk officers are becoming alert to, there is some survey evidence that shows that global chief risk officers are now much more conscious of geopolitics as an issue. And I think, in the sort of funny year that we've had because of coronavirus, geopolitics is, sort of will spike on the back of that as an issue because of the political fallout, if you like, and the geopolitical fallout from coronavirus. So I think all told, it's a combination of the environment and the way it sort of specifically plays into impacts for financial institutions that makes this a much more sort of pressing topic for the risk community.
It's a really interesting time to be talking about it. Part of me wonders whether we're talking about it more because it's more of an issue, or maybe because risk is sort of growing and developing and evolving. But I guess if we talk about geopolitics and risk as a specific area, So from my understanding, geopolitics are driven by external forces, and as an individual firm, chief or head or strategist, firms ultimately have no control over geopolitics. Ultimately, doesn't this mean that there's some issues with risk managers about thinking what they can do about it?
Definitely. I mean, just one point I'd weave into the first question. Thinking about the direct impacts of geopolitics, you could cite, for instance, the Hong Kong Autonomy Act that passed in the US earlier this year, which directly identifies financial institutions as a sort of policy conduit, if you like, for US policy in respect of China. So you can see that there are sort of direct impacts in that direction as well, if you like. But it is right to say that otherwise geopolitics is largely a kind of an external risk over which financial institutions have very little control. I mean, to the extent that they might have some control, they can lobby in different capitals to try and, if you like, dial down the national security policy making instincts of policymakers in those capitals. But it's quite hard for them to do that in opposing capitals at the same time. An American financial institution may get some lobbying traction in Washington, but is unlikely to get the same degree of traction in Beijing and vice versa. So that's probably the best that they can hope for in terms of direct control. But that doesn't mean that risk managers can't do anything about geopolitical issues. And indeed, I think regulators expect the risk management functions and particularly in GSIBs and GSIs and major asset managers to account for this risk in their approach to risk management and risk measurement. And you can see that expressed in regulatory rule books, and you can also see regulatory concern over geopolitics in the sort of routine and regular financial stability assessments that the major central banks produce. And I think in a nutshell, what risk managers can do is try and bring greater coherence and structure and internal alignment of activity on geopolitics to bear, as well as bring a sort of greater analytic quality to the way they try and anticipate and aim off, if you like, for the impacts of geopolitics on business models.
I think that's really interesting, and I've seen. I mean, clearly, I look at things from a recruitment and hiring standpoint, so a high level. But I've actually seen these sort of economic and political analyst teams, especially for global trading firms. I've seen them increase their, whatever they want to call them, whether it's geopolitical risk or it's economic and political analysts. Those teams have definitely increased in size, and I've seen some firms add to their teams in Brussels, for example, where clearly lobbying is a key topic. And yeah, I guess it just depends on the sort of size of the firm in terms of what you were talking about from a lobbying perspective. So smaller firms may have their own challenges, but I think if you can, it's good to have that understanding and closeness to those relationships. So if we talk about sort of common challenges that financial firms face, are there sort of particular common challenges that you're seeing, particularly from a risk perspective, that the firms face?
Yeah, very much so. So the typical sort of, or part of the typical response that I find when engaging with risk teams on this agenda is that argument that it's very hard to measure geopolitics, and what you can't measure, you can't manage. And I think that's a sort of theme that is common to a number of external risk types, but I think particularly sort of bears on geopolitics as an issue. So that's one major common challenge I find. The other is that geopolitics is very often sort of listed in firms' risk registers. And there will be a line item that says geopolitics, but very often there is no sort of single supporting team that services, if you like, that line item in the risk register. There's no sort of clear accountability or no sort of functional responsibility to support that. So it sits in the risk register, and because it's there, people think that the risk is being covered, if you like, but actually there's very little sort of direct activity that helps support work on that agenda. I think the other sort of really key challenge for financial service or financial sector risk teams is trying to understand what impacts political and geopolitical trends and events can have. It's that challenge of trying to translate external forces into internal impacts, and doing that in a sort of consistent, structured and methodical way, and a way that's holistic as well. That's certainly one of the other key challenges I find.
Definitely, yeah. So sort of a holistic approach for everyone,
yeah.
which is good. So you touched on a couple of points, which I think I'll come back to. But I mean, the quantifying risks is definitely a theme that I've looked at, and I think is relatively important where you can. But are there better approaches that CROs can look at? So what can CROs and risk managers think about doing to improve the way that they actually anticipate the risks as much as one can anticipate geopolitical shocks or incidents?
Absolutely, there are certainly things they can do to help try and get ahead of this issue, and sort of move to a more proactive rather than reactive sort of internal posture and process on this. And in a nutshell, the way to do that is to adapt internal frameworks and internal processes to upgrade the methodologies that they are using to try and measure and manage the impact of geopolitical volatility, and to align models and tools across risk functions to make sure that they're, as it were, reflecting the holistic nature of the risk with a sort of internal and internally holistic response. So that different parts of the risk function are not pulling in different directions on this, but moving in the same direction. And I think some of the things your listeners and the listeners to this podcast could be thinking about, for instance, is and in no particular order, who in risk leads work on this risk, on assessing this risk and trying to drive forward holistic impact assessment. And if the answer to that question is there is no single team, then potentially therein lies a problem. The other sort of thing that risk functions can think about and CROs can think about are, have they thought about integrating geopolitical factors into stress testing and the ICAP process? Certainly in for instance, in the UK regulatory rulebooks, the expectation is that geopolitics is a feature of the ICAP process, and that's certainly something that I think risk functions could and should be doing, and could be doing more effectively in light of the environment that we're in. Perhaps another question that listeners could think about, is this, that the kind of classic approach to incorporating political factors into risk decision making are through line items, if you like, in individual country risk models. But is the country risk model sort of paradigm effective in an area when political risk now spans multiple countries at the same time? And that's a sort of question to consider is, are you sure, if you're sitting in a risk function, are you sure that your country risk models are adequately sort of capturing these kinds of transnational and cross-regional risks as effectively as possible, or is there more that you can be doing to capture that? And then perhaps the sort of final sort of question, if you like, would be who's checking to make sure that different teams' models, where they are accounting for these kinds of issues, sort of roughly speaking, align, where risk measurement aligns, where the outputs of those models and the decisions that they feed into broadly sort of pull in the same direction on major strategic questions of sort of geopolitical risk exposure.
Definitely. I mean, I think you've brought up some good points there for anyone listening to this to think about, and I think it's really clear and important topic.
Thanks very much. I was going to ask Ed if I could put a question back to you. You know, one of the reasons you know, I think we're having this conversation is because you've highlighted, you know, from your contact and engagement with the Chief Risk Officer community, you've highlighted that geopolitics is clearly something that's increasingly on their minds. Do you get the impression that they, as it were, have arrived at a point where they know how to respond, or are they still trying to work through, as it were, what the risk environment actually looks like, and then they'll turn their mind to sort of a more coherent internal response?
Thank you. Yeah, I mean, I guess the first point would be it's certainly been recognised as a risk. It's being discussed more, and it's something which CROs, certainly from which the conversations I've been involved in, it's a consideration of, you know, but I think the typical issues are, what can we actually do about it? And I think that's the real challenge. Assessing it as a risk is important, but knowing how to manage it, knowing how to quantify it. I mean, you've touched on sort of some of the points here. I think part of the issue also is, I guess, if you're a large company like HSBC, you can have a geopolitical risk function where you can have large teams that are specialised in this, or large-ish teams that are specialised in this. But if I'm a CRO of a smallish firm, what can I do about it? So I might not be able to have the ability to sort of lobby, but how can I look at these things? How can I assess these things? And I think it's a relatively, I mean, geopolitics is an age-old issue, but I think certainly from a risk standpoint, in terms of actually looking at it, it's a relatively new area. And I think advice and guidance is sort of needed and required. And I guess I'd sort of throw it back to you, Derek, just as a sort of a last sort of question in response to this. If I was a CRO or a head of risk at a smallish firm, it could be a bank or a trading firm, and I feel like I'm struggling to get budget or headcount to build up a geopolitical risk team, even though in fairness, I have seen some firms build up and grow teams before and be really successful from a strategic perspective and change things. For a smaller firm, is there any advice that you give in terms of, like, I mean, I guess you might say they should call in a consultant like yourself. I can say that, but genuinely, is there any sort of advice or points that you can give, or what you've seen people do from your consulting experience, where budgets are maybe slightly limited?
Yeah, absolutely. And where budgets are tight, or you know, the scale of the firm doesn't necessarily lend itself to the creation of a sort of bespoke internal capacity on this issue, or analytical capacity. In a sense, actually, that's a sort of second order issue. The first order priority in those circumstances is not necessarily to hire a new team of political analysts. In fact, probably it's more important that an existing team who may be working on these issues is given the responsibility and the accountability to lead wider work across risk functions, so that you end up creating a single point of responsibility for this. I think part of the challenge, because this is a new issue in the sort of risk space, part of the challenge is that typically lots of different risk teams will be working on this, but in a sort of pretty uncoordinated way. And one of the easiest solutions to that is to try and bring some structure. And in order to bring that structure, you don't need to necessarily hire a load of new people, but you just need to rework your internal process and effectively nominate a sort of point of responsibility for driving workflow on this. And from that, you can then sort of start to drive a holistic impact assessment process. You can leverage at quite low cost external political analysis and use that to drive and make sure that that analysis is driving action across risk rather than just sort of in the individual silo. And then you can start to look at the way different risk models are aligning or not aligning. And you can also start to identify where it may be that existing risk risk teams should be accounting for political and geopolitical risk factors in their work, but maybe are not, and you can start to fill in gaps. So I mean, to come back to the kind of top line of my answer, it's not necessarily a process of just hiring in a sort of small or a decent sized team of political analysts, although certainly the larger financial institutions would probably want to go in that direction. It's much more about sort of organizing internally in a more effective way.
I think that's great. Derek, you've brought up so many interesting points. I could ask you a ton more questions, but thank you so much for your time, Derek. It's been really insightful having this discussion. I think there's some really key points that certainly I've taken away, and I think the viewers will have taken away. So again, thank you so much. For anyone who's listening, please do subscribe for further risk talks. Feel free to contact Derek. I'll put a link to his LinkedIn profile in the posts. And again, Derek, thank you so much for your time.
Very much my pleasure, Ed, and thanks too for making the time to speak.